Good morning, traders. Today is Wednesday, May 4th. My name is Charles, and this is the Pirate Traders live stream. The Pirate Traders live stream. All right, what are we looking at here today? Well, yesterday we just had a rotational day, as we kind of expected, with the market waiting on the FOMC meeting or the FOMC notes that are coming out today from the meeting yesterday. Obviously, we got continuation of that balance into the overnight, an extremely tight range. So I have a feeling there were some overnight traders very frustrated last night, unless they were trading reversion to the mean. So yeah, the market is in balance, right? It's in the zone where it's waiting for more information, and it's not being controlled by the bigger players. It's just short-term traders that are picking each other's pockets, kind of making bets back and forth. And so by the end of yesterday, we left 1 week reference below and 2 week references above, a further sign that it was just short-term traders doing business yesterday. I will say pulling back up into the balance area and closing up in the balance area is bullish. Let me just zoom out to the daily real quick so we can look at that. So you remember we had this balance area here. When we looked below it and failed and pulled back in, we headed to the opposite end. There, once again, we looked below it and failed and pulled back in, and we headed to the opposite end. So looking below, failing, and pulling back in increases the odds once again that we're going to head up to the opposite end. But of course, it's really a moot point, because once those FOMC notes come out this afternoon and Papa Powell starts talking, anything can happen, right? The market can literally just do anything. But I would say there is a little more momentum to the upside due to the fact that we're back in balance. So I see that as a little bit bullish. As far as what I'm expecting this morning, I'm assuming the chop is going to continue, much like it did in the overnight here. We're just going to keep kind of bouncing around until 2 p.m. today when those notes are released. But if I'm going to be wrong, we can pretty much just use yesterday's high and low as the deal or no deal levels. So if they push down here towards yesterday's low, they may just be trying to repair that weak reference. So I would need to see them push below yesterday's low, come back up and find resistance before I'd be looking to go short for continuation to the downside. And same thing with yesterday's high. The fact that we left those couple of weak references there, they may just need to push up and poke above there before they pull back in. So to get me long, they'd have to get above yesterday's high, come back down, and then find support for me to get long for continuation to the upside. Otherwise, my assumption is we're probably going to have a lot more chop like yesterday. You know, the TPO from yesterday lining up almost perfectly with the TPO from last night, just kind of further, it makes it like a stronger magnet. So as price pulls away, there's a real strong magnet to want to pull it back, and vice versa. So probably not going to be a super exciting morning, but we'll have to wait and see. There might be people who want to position themselves for the FOMC that could cause a little push one way or another. For those of you that are not members of the brigade, I will be going live here once again today at 2 o'clock for those FOMC notes. So come on back and hang out then. Brigade members, of course, get to hang out all day. So the market is open right at that POC from the overnight. Overnight inventory is basically neutral. So let the chop begin. Using, obviously, the nodes of volume as support. So one node around 4170 is the first support, and then the node at 4155 is the next support below that. And like I said, I wouldn't get bearish at all if they just come down here and repair that weak reference, because they're likely to come right back up with that super strong magnet. So it would only be if they get below yesterday's low that I get bearish. Please smash that like button. Give me that little thumbs up if you don't mind. I sure would appreciate it. Chris Yee. Good morning. May the 4th be with you. I didn't realize that. Happy Star Wars Day. Diego, good morning. MW, hi. MW, it says there are 4 of us watching, but we already have 5 likes. No, I don't like my own videos. That would be weird. Somebody popped in, they pushed like, and then they disappeared. Philip, good morning to you. Scooball in the house. Ronald, good to see you. Joe, Texas. Welcome, Joe. RK Leon, back with us. Good morning. Mick Stockster is in the house. The Shaw is with us. David Glass, good to see you. Amir is here. Greg H, hi. Cyrus, hi. Levi, Rev, and Bossman, welcome, welcome. Nor Auto Trader in the house. Cortman, aloha. Hustler forever. Good morning to you. Daniel, good morning. Sanju, good to see you. David V, here he be. Dean, good morning to you. Dean saying the FOMC's at 2. I'm flat till then. Yeah, if there's anyone here that's not familiar, what will happen at 2 p.m. today is they will release the notes, the minutes from yesterday's FOMC meeting, and a set of algorithms will read those minutes and in a fraction of a second make a decision to buy or sell the market, and then more algos will pile on, and the market will move very, very quickly. And that'll probably last 10, 15 minutes. And then at 2:30, Jerome Powell will speak. And once he starts talking, it's anyone's ballgame. He could say anything that moves the market. So we will hang out and watch it happen and look for opportunities to make some money. This afternoon. Jack, good morning to you. Daniel says, today Biden will be talking at the same time at 2 p.m. Well, I know who I'll be watching. Cobra, good morning. Design Knob and Will, good to see you. Arthur, good morning to you. Gunk, good morning. Boy, this market is just moving today. Look at this. Woo! Can you take the heat? Anita, good morning to you. Welcome. Andrew, good to see you. John Lash in the house. Rugsy, good morning to you. RK just Biden my time. John, good morning to you from London. Scooball a week ALO. Yeah, you're correct. I mean, I have a feeling all the references this morning will be weak if we stay in a super tight range. But yeah, I'll mark it. So NQ, same as the ES, really. Um, Man, yesterday was a perfect bell-shaped curve. It's like textbook. Look at this one. The overnight literally looks like a bell. Ding, ding, ding. Um, so yeah, the NQ also in rotation, same as the ES. I'd need to see it get, I would say, above at least 13,170 and come back down and find support before I get bullish on it, or see it get below like 12,980. Come back up, get resistance before I get bearish. Otherwise, I think we're going to get more chop. One way to give yourself a signal if the chop is going to continue is watching what happens to volume as we get sort of to one end or another. Does it taper off like this? Do you get less and less volume? If that's the case, they're likely to keep pushing down there and then having to pull back up, pushing up and then pull back down. But if you see an anomaly where like it pushes lower and then it starts to build some volume down there and it gets kind of like a little fatter volume node, it might want another push lower from there. But as long as it's rotating like this, you just think of that POC as a magnet, and every time the market goes away, it'll get pulled back, goes away, it'll get pulled back. Exciting stuff. Scott, need to get to 1,000 likes. Wouldn't that be nice? Got to get to 1,000 viewers first. Maybe on the FOMC stream, it's possible. I made a clickbaity card for it, thumbnail, that says, "Will Jerome Powell crash the market?" So that'll get some people. All jokes aside, he could say the wrong thing, though, and crash the market. Scott, what is NQ's POC? Well, right now, the POC for today is not really a big focus yet because we're just in the A period. I mean, we got to spend some more time for it to really be relevant. So what I'd be paying attention to is this area around yesterday's POC, 13.7 or 13.079, and then also up here where the overnight spent all that time, and assume those are kind of the magnets the price will be bouncing between. And the reason basically just is that, this has been a safe place to do business. All day yesterday, this was a safe place to do business. All night last night, that was a safe place to do business. So if the market is having chop, if it's rotational, meaning there's no leadership, people want to go do business where they know it's safe. And it'll keep going back there over and over again. They're just short-term traders trying to make a few ticks here and there. Make a quick buck and then get out. It's a good point, Donkey. I didn't even point that out, the 45-degree angle. From the highs, both markets have it. So that will likely act as strong resistance as the market pushes up into it. But yeah, if it can break through, that can then become support. But that will be a lot of work to get through. Yeah, both of them. Perfect 45-degree angles. Textbook. So yeah, expect resistance up in here. If you weren't already. Arcalion, have everyone remove their likes for a minute and then replace them on your signal. That's funny. City Matt, thank you for the $4, brother. Appreciate it. Buy me a cup of coffee. You're a good man. I'm sipping on a dark roast as we speak. Scott, what 45-degree angle? So this is one of those market profile theories that if you develop a 45-degree angle from either the high or the low with the TPOs like this, it will act as very, very strong support or resistance. So if it was, let's say it was like from the low up like this, that would be like really strong support where the market would keep pushing down into it and it would find support there. And if it's from the high, it's resistance on the way up. It'll really have to like work to get through there. But it's important to note, it only counts if it's from the high of the day down. So like if there had been a little spike up like that and then a 45-degree angle, it doesn't matter at all. It's only if it's right from the high of the day or the overnight, that is the sign that there's resistance there. It doesn't happen often, but it's one of those interesting things to track when it does. Scott, why did his show up? Yeah, he donated through the super chat on YouTube. But if you donate through the link on in the description, it should also pop up. It just won't pop up in the comment. It'll pop up on screen. Scott, makes sense. So no weak or poor highs. Well, I don't really look at weak and poor references in the overnight. That's not really that important to me, especially one like yesterday. I mean, just look at how tight that range was. Every high is poor or weak because they were just stuck in such a tight range. Man, if anybody was sitting and trading last night, it must have been so boring. Okay, next support for the NQ is going to be like 13,037-ish. The area just below here. So this is where we're watching that taper as they keep pushing down. Does it keep this nice taper? Is there more volume higher and less as they go lower? If so, that magnet will just suck the price right back up. Alex, you're set to 2 ticks though. No, I mean the shape would still be the same if I was in 1 tick. Donkey ES and NQ divergence. Yeah, a little bit. They're both just kind of bouncing around. Looks like both are having a hard time getting above their opening price too. That's a little bit bearish. Scott, it's been that way. It's been that way, up, then down, then back to flat every night this week. It has on both markets. It's just been rotational. Bell-shaped curve, bell-shaped curve, bell-shaped curve. And bell-shape, bell-shape, bell-shape. So that's just a sign that the overnight doesn't want to take the leadership, right? They're playing it as safe as they possibly can. You know, they're uncertain of whether the market's going lower or not. So this is a great example of how hard the market's having to work to try to push through that 45. Next major resistance is about 41.89 on the ES. RK, NQ is actually below yesterday's open as well. Yeah. Like I said, it doesn't get me bearish till they start to break those lows. No reason we don't just chop around inside yesterday's range, waiting for that 2 p.m. notes release. Ronald, low relative volume on the big market, 50%, lowest in several days. Correct. That is the big players stepping aside, waiting for new information. But today is the day they're going to get some new information. And oh boy, will it make the market move. I don't know if it's going to go up or down, but I know it's going to move. It'll be one of those, 100-point days easily. Well, does anybody have any questions for me? Not much to talk about here. I don't want to bore the chat. Oh, you know what? I thought of something I wanted to talk about. Placing stops. So I was talking to somebody yesterday, and they were telling me that they enter trades on the ES, and they have very, very tight stops, like usually just a point at the most. I would highly encourage, if you're trading that way, where you're trading like ES contracts with like very, very tight stops, to just try trading with smaller size for a few days and use much wider stops. So if you feel like you can only risk a point or two on a full ES trade, switch to an MES, and now you can risk 10 points. Right now you can, for the same loss to your capital, you can give your trade a lot more breathing room. I mean, 10 points is a lot, but you know what I mean. That is something that if you feel like you're getting into trades all the time and you're getting stopped out, you really need to break that habit, because that's basically just like giving free money to the market. Getting into a trade and not giving it enough breathing room is just giving your money to the market. So better to take a smaller trade size using a much wider stop. And the downside is your profits will be less, right? You won't make as much money. If you only take 2 or 3 MES contracts as opposed to a full ES, you might only make, $50 off the move instead of making, $500 or whatever the case may be. But it'll keep you in the trades. And so you'll have a higher win rate. And the more wins that you get, the more confidence you'll build. And that confidence will allow you to size up again and get back into those full-size ES trades and give it more room, because you'll know you have a high win rate in terms of the number of trades that get to your take profit order. So that's certainly something to consider if you find you get stopped out a lot. Another trick if you get stopped out a lot is start putting your entry where you would put your stop, right? So for example, if a trade that you would take would be to buy this node of volume right here with your stop right below that A period low, today, instead of putting in a buy order here, put your buy order there with a lower stop. And then you might get filled less frequently. You might, miss some trades because it doesn't quite get down there, but your win rate, your success rate will go up exponentially. So another thing worth thinking about. Trading Donkey, some good earnings gambles tonight, tomorrow. Etsy, Spotify. TWLO. I don't know what that is. Pavel? Homer Market? Are you talking about this afternoon? John Lash, favorite hobby growing up? Well, I was just super into sports when I was a kid. I played every sport there is. Soccer, basketball, karate, lacrosse, football, swimming, water polo for one season. Oh yeah, I was big into sports when I was a kid. I was also in a boys chorus when I was like 6 or 7. Anita, only when do you know you are wrong? Like in a trade? Well, you should know ahead of time. So anytime you're thinking about buying or selling the market, you need to have a reason to want to do it. You need to have a thesis for what you're doing. So for example, you're looking at support down here. You're watching how that volume is tapering off. You recognize that the volume tapered off here yesterday. So you're assuming that'll be good support for a bounce back up. So you would say, okay, cool. I'm going to buy that support right there, right? That node of support. But then you say to yourself, well, how do I know I'm wrong if I were to buy that node of support right there? Well, it can't be if you just push lower because you've got a weak reference down here. So the market might need to come repair that, and it doesn't mean it's going any lower. It may just need to get a couple ticks below there. So you know, I got to put my stop at the bare minimum right here. Okay. So then what you would ask yourself is, all right, this is where I'd enter my trade. Getting below here is where I'd know I'm wrong. Where would I want to take profits? Well, let's say you wanted to take it at the overnight point of control, or say our halfback right here. Okay. So you would say to yourself, how much risk am I taking? This many points of risk for this many points of reward. Is that a trade I'm interested in taking? You know, and then if it is, if you want to get into that trade, you would then say to yourself, all right, well, having to take, 11, 12 points of risk, how much position size can I take? Can I trade a full ES contract? Will 12 points of loss be more than 2% of my account size? If so, I need to trade MES and figure out what amount of MES contracts, if I lost 12 points, would equal 2% of my account. And then that's how many you would put in there. And you'd put your stop right there. And you'd wait and see what happens. They call it risk management. Oh, Twilio Cloud Services. Daniel, yesterday's POC acts as support resistance. Not really. I would say more like a magnet to pull price to it. So just think about yesterday's range as like a range, in between here and here, the market has indecision. We know that because it did it yesterday. It went up and down and up and down and up and down, and it couldn't get above the high and it couldn't get below the low. So it just, in this area, it wants to just bounce around. It's not bigger players trying to move the market in a new direction. It's just short-term traders like you and me trying to grab a quick buck here and there. And we'll get out of that trade right away. And as soon as we do, it goes the opposite direction. So Yeah, just kind of assume anywhere in here you're going to get chop. You're going to push away from the middle of the range and then pull back in, push away, pull back in. Heismeister, how old are you? I'm 37 years young. John Lass, all around Olympian over here. Well, to be an Olympian, you have to be good. I just said I played sports. Didn't say I was good at it. Although I was a good swimmer. Gunk, I think the only way tight stops work is when you read on order flow. When your read on order flow is working and you do make over 3x on your winners. Yeah, I mean, of course, if you're going to be trading scalp style like that, you want to always have at least like 3-to-1, reward to risk. But what I find from coaching, from like emails and stuff I get from people, a lot of people just like every trade they get in, they have a really tight stop. Like they have like a stop based on money. Like I can lose $100. And so their stop is always, 2 points away or whatever. And then they just get stopped out and stopped out and stopped out. And they get really angry and frustrated. And the idea is like, size down and give yourself more breathing room. Your profits won't be as big, but you'll keep trading. You won't keep getting stopped out. And that's the key. Do I still use Dalton's opening types? I'm not really sure what that is. Will, at what point in the day would you say there is a bullish or bearish bias? Well, like I said, it's not point in the day, it's point in the chart, right? Getting above yesterday's high, coming back down and finding support, that's bullish. That's new buyers deciding they want to push the market somewhere new, right? They're not just picking each other's pockets anymore. They're really trying to move the market. And same thing with yesterday's low. If they get below that low, come back up, and they get resistance, they're trying to move the market lower. Okay, so that's where you get bearish or bullish. But to be frank with you, I have a feeling we just won't get much until 2 o'clock. Because that's when those FOMC notes come out. George, can this methodology be used to trade in crypto? Do you mean market profile software? Yes. You would have to spend a long time watching it, though. The nice thing about the S&P 500 is it kind of has a certain way that it moves. There's like a lot of patterns in it, whereas crypto is much more like manipulated, much more pump and dumpy, and kind of random in the way that it moves. So absolutely, market profile would be a valuable tool, but you'd really have to become an expert on understanding Because what Market Profile does is it allows you to see the two-way auction process, right? It allows you to visually see where are the buyers and sellers, what are they trying to do? Are they trying to make support? Are they trying to make resistance? Are they trying to break out? Whatever, right? So you have to understand the patterns, the behaviors of those participants who are trading that market. And I would say crypto is much more difficult to understand the psychology of the participants because it is, quite manipulated and not natural. Gunk, agree. This guy's using tight stops and it working are like Axia prop traders showing their highlights on YouTube, but no one knows how often they lose trading like that. Well, there is a form of trading which is called scalping where you always use tight stops. It's part of the system. But you have to be really good because you can get stopped out really quick. And then you're just giving free money to the market. Here you go, market. Take my money. RK, if you found out there was a hit put out on you, but only after you next petted a dog, how many minutes would you survive? Oh, man, I'd survive however many minutes till I see the next dog. Okay, the open drive, test drive. No, I don't look at any of that. He doesn't teach that anymore. That's from the books. George, but if we trade, for example, in Bybit, one of the biggest exchanges, the volume would be enough and accurate. Yeah, I mean, any exchange that has a decent amount of volume, you can read off of it 100%. But it would be more useful for like support and resistance levels and stuff like that, more so than market like behavior. So another way to try to explain that is like the way I trade is I ask myself the question, what is the market trying to do and how good of a job is it doing of it? I could probably ask that question on Bitcoin, maybe Ethereum, but when you start getting into the smaller cap coins, I mean, there's just no way to know what's happening. It's like in a moment's notice, the market can do anything. And so that's just not, that's gambling, taking trades in those markets because you're guessing. You don't really know. And I am not a good gambler, so I avoid that. Gunk Future Trader 71 talks about opening types a lot. I guess it's helpful in a way to have types of openings, but every day can be unique, I think. Yeah, I mean anything that you can use to kind of wrap your mind around what's happening is great. You know what I mean? As long as it works consistently over time. So for me, when it comes to the open, I really think about just a couple of simple things, right? Which is, are we opening inside the previous day's range? That's when I assume we're going to grind around for a while, right? What we call chop. Or are we opening above or below the previous day's range, which is a gap? So that's the first thing. Are we in the range or are we gapping? And then the question is, where do we find support resistance as we start to chop around? And the overnight inventory, right? Was the overnight inventory net long, in which case we would expect a small push lower, or was it net short, where we would expect to push higher, just so those overnight traders can take profits? But outside of that, there's not much more to think about, the way I look at it anyway, at the open. Trading Donkey, the key on tight stops, the key is patience. Like your example earlier, don't take the long at support with the weak low sitting there. Wait for it to repair, bounce, and then get back in through the volume node. Then buy it with a tight stop below. Yeah, that's a great way to do it. I'm simply talking about choosing the position size based on the stop. That is the concept that people don't understand. They think if they trade one ES contract, they think every trade they have to trade one ES contract. And that's not the way to think about it. The way to think about it is, how much risk do you have to take, regardless of what setup you're trading? Buying the support on the push down or buying it when it passes back through on the way up or whatever. Where is that trade wrong? And then choose the position size based on that. Not an arbitrary random number. All right, so NQ is breaking yesterday's low. That is bearish to see. So we're now looking for resistance somewhere around this like 70 level for continuation to the downside. They've also got the ticks trending lower. They've also pulled the value area overlapping to lower. So that is neutral to bearish. Next support, 12,900s. Looking for resistance at yesterday's low. Donkey, it's dangerous to tell people to just widen your stops and size down. If you're not getting direction right, they're just going to have a bigger losses. Yeah, but I don't think you understand the process of learning. You can't learn everything about trading all at once, right? First, you have to learn to just not lose money. That's the step one, is just learning to protect your capital. What you're talking about is getting to a skill level higher, where you learn to have patience, you learn to control your emotions, you learn to recognize higher probability, setups as opposed to lower probability. Like, those are later steps in the process. The first step is you have to learn to just stop giving money to the market for no reason. And that's what I'm trying to help. You're farther ahead than these traders I'm talking to right now. Boss man, we're getting pink volume nodes. We are. Sellers are piling on down here. I'd still like to see them test yesterday's low. We got this low volume node here that would like some backfilling. So let's see how they react when they get back up to yesterday's low. But that is bearish. That's new sellers jumping on. ES is still very rotational. Bad taper on the low, though. So probably need to repair 41.45. Amir, wait, you guys are keeping your money? Yeah, man. That's step one. Protect your capital. Diego, I would suggest new traders who are still learning stop trading with real money until they learn a method. I agree. I preach it day and night, but they don't do it, man. It's just people don't want to paper trade. It's the weirdest thing. They'd rather lose money. Because they could win. They might win money. So they'd rather just give it away for the chance that they maybe could win. Look at all these people on Twitter. They're bragging about how much they win. Me too. I want that. What, learn a complex skill? No. I just want money. apartment. Uh, a boss man with the ES not showing much conviction to the downside. Can that make NQ stall also? Yeah. I mean, NQ's got to get resistance at yesterday's low. Otherwise, it'll just, which actually we're testing right now. Otherwise, it'll just rotate right back up. Speaking of rotating back up, we got on the ES here, we got good taper on the low. And the ticks are starting to push their way back up. So if they can poke above the 0 line, we should get a rotation back to the POC. Anita, sim trading is not the same as live. You can have really good results on sim and then blow up a live account. Absolutely. But that's the problem is it's two separate skill sets, right? Learning how to read a market is one skill set, meaning learning how to understand what it's doing and why it's doing that. Learning how to trade a market, meaning how do you enter trades? How do you put your stops? How do you take profits? That is another skill. And then the skill of managing your psychology is another skill on top of that. So if you try to learn to trade with real money right out the gate, like day one, I'm going to just put 10 grand in an account and I'm going to become a trader. What you're trying to do is you're trying to learn all three things simultaneously. And that's why it's so hard. You're intentionally making it harder on yourself. The analogy that I use is like, it's like trying to learn to play a musical instrument on stage in front of an audience. That's not how it works. First, you get a teacher to show you, what the different chords are. and then you spend years and years all alone in your bedroom, making no money, getting no respect, no one even knowing you're doing it, and you work at that skill of learning to play that guitar really well, then you get up on a stage, and then you have to learn how to perform in front of an audience. You have to learn the skill of being entertaining. It's a process to get you from the start to the finish. So, you have to go through the steps. So the first step, if you're new to trading, is just learning to read the market and how to have a strategy for trading it. And the emotions, you don't want to bring the emotions in during that, because then that's making it harder on you, right? So you want to keep it as easy and simple until you master the process. But then once, with a paper trading account, you've got consistent profits, it's been a couple of months, you have a great win rate, you have a lot of confidence, you feel good, then you start trading with real money. And yes, absolutely, you'll instantly start losing again. But now you have a winning system. You have confidence that you can read the market, you understand what it's doing, you have a strategy that works. And so now all you have to worry about is overcoming those psychological barriers, right? Which is much easier to do when that's the only thing you have to tackle. That's my 2 cents anyway. All right, well, there's the C period printed. We left some single prints behind in the B, so those will need to be backfilled. Looking for resistance right at the halfback, 41.66. If the C period presses below the B period, that would be bearish as a potential beginning of a downtrend, and would certainly bring the week low at 41.45 into play. But same as I said earlier, I wouldn't get super bearish until we got below yesterday's low here on the ES. NQ. So NQ is getting resistance at yesterday's low, so that is bearish. If the C period dips below the B, I would see that as one time framing lower and look for a short trade for continuation to the downside. If they get that C below that B. They also left a bunch of single prints behind. And with that, I shall bid you all farewell. Thank you so much for joining me. Like I said, we will be back at 2 o'clock here on the public YouTube. So if you're still trading this afternoon, come hang out again. Or, of course, you could join the brigade. There's a link in the description. Only costs $10, and then you can hang out all day, every day. Food for thought. Have a great rest of your day.